right. We have a unexpected managing partner panel, since it's just me and Jarrid today. We're going to keep it flowing. I think this is episode 4 and Jarrid's first episode. So welcome to the show, Jarrid.
Thanks. Good to be here.
It's good to have you.
It's than I expected, but we'll take it.
We could have you down on the plane, traveling around the world.
For real.
So yeah, we'll keep it short today, given it's just Jarrid and I, but wanted to at least hit some of the key things that have happened the last 2.5 weeks. I think we would be remiss to not start with the Fearless Fund lawsuit, which has been in all of the Black GP group chats and channels, rightly so. And, obviously it's current litigation, so we'll be careful what we say, but I think just from like an emotional and mission-driven firm, something that we should at least, hit on and talk about. So I don't know if you want to start. I can start.
I know I guess you jumped out there with your tweets, so I think you feel a lot about this. I'd love to hear how you're thinking about it, because I'm definitely have the more business continuity legal hat on.
Yeah, so I think to get that point, I think for me, it was really around like what was right or wrong, what's the implications for this long term. Jarrid, Brandon, and I met through a program called Management Leadership for Tomorrow, which is a program focused on Black, Latino, and Native American college students getting into Fortune 500 companies, and they also help them get into top business schools. And so I know like what that program has done for my life, whether MLT or SEO and a number of other programs. And so I think my biggest fear is like, if the start is that like, hey, we can't have minority focused programs, whether that's for food programs, affordable housing, financial, education, I think it's a really slippery slope where I don't see how it ends in instances like where a case like this kind of gets through. Yes, it's a pitch competition, but I think the bigger fear is like, what is like next? And I think so many of the firm wouldn't exist for us if it wasn't for MLT.
Yeah.
Right. And so that's the stuff that kind of gets me concerned and nervous. And there's a lot of legal talks, and we listen to Cooley and we talk to our lawyers, whether it's legal or illegal, but I think for me it's more about like what's right or wrong and like what's the future of the country to kind of right size, what's happened for a lot of underserved communities.
Now, it's a good point, right? I think the programs you're referring to and affirmative action more broadly, I think has been hugely beneficial. I think I tweeted like, I don't know if I benefited directly from affirmative action, but I know I deserve to be in those runs. I think some of these programs just made it possible for great talent to have an opportunity, which is ultimately what we're trying to do. Honestly, as you were talking, it just makes me think about the 2016 election and why people were crying on the outcome. It's like folks knew, elections and people in power just have so much ability to dictate our day-to-day lives. And I think sometimes people get a little jaded about how messed up our politics are. But when, you have a president of a certain party and they have the ability to appoint judges and there's 3 openings in a period of time, like this kind of stuff happens, right? And so, I don't know, it just makes me want to get more involved. Like, I'm not going to run for office, but I think if you want to support, candidates and get our peer groups and get smart young people in to work on some of this stuff. But what sucks about, the judicial appointments, like these are like lifetime appointments, even at the circuit level, they're long-term appointments. And so it's going to take a long time to undo this. But on the flip side, I think things like this, whether it's, Roe v. Wade getting overturned or this, hopefully it can galvanize and create more, alignment and energy around this in a positive way. So that's kind of how I'm thinking about it. I'm hopeful that, Fearless Fund and all their allies are able to put up a good fight. And, we're obviously going to do what we can do. But to your point, it's more important to be on the right side of history. The last thing I'll say is I was talking to LP before this, and he said, hey, when I think about what you guys do, it's really that you're trying to make a portfolio that reflects America. And that's right. Like, that's what we should be doing, right? Black, Latino, women founders only get less than 4% of all VC funding. We're going to have to overcorrect a bit to make any dent. But ultimately, that's the right thing to do. And so I'm agree with you that that's what we should be focused on.
Yeah, no, I agree. And we talked about this in the last episode. just the ages and that's happening in Congress and the disconnect, and people have unlimited power at the Supreme Court and like how that impacts it. And I think to some extent, a lot of people fell asleep at the wheel, and now we're all kind of like, how is this happening? Like it seemed like unfathomable.
I remember I had friends talking about, I'm not going to vote, and I'm like,
I used to be pissed at that,
being mad, but like still show up.
Yeah, and people were pretty sensitive about it too. Like, don't tell me what to do. That's part of democracy, right? And we try to encourage people to vote too. So, I mean, long fight. It's gonna be a long haul. It's been, I think, 2 weeks since the case came up. A lot of people, I would say, one thing, like, I haven't seen group chats. People call this active since the SVB. So it is like a crisis mode for a lot of managers, because we know like it can impact us personally, professionally, and even like, to the point of like your kids and other things. Like there's so many more implications. So I think it is a moment of, crisis that we need to come together. And it's going to be a long fight. It's going to continue to be a lot of work.
Yep. I mean, I was curious about who's funding this operation, right? And I'll spend some time like looking through like who actually is all funding this energy, because even if the letter of the law it has been stepped on, like we know the spirit of the law is on our side for sure. And I'm curious like who the groups are and like how do we galvanize, big donors, companies to all come. But I'm happy to see that a lot of corporations that have made diversity initiatives at least want to continue to be involved, and hopefully are going to support with dollars and action behind the scenes here.
Yeah, like the biggest risk is people get scared. You get into this moment, similar to the anti-woke Bud Light, and now, Bud Light was saying they don't know if their earnings will ever come back after the incident. And it's like, because of that, do you not support what you really believe in? And so, I think like that's a fear for me, is like, do these corporations and do large LPs, institutions, stop funding things because there's a moment in time, where people are pushing back. And you've seen it happen for a lot of corporate brands already. So we'll see. I guess moving away from the political side, more to the macroeconomic side, thinking about the economy. We're more than halfway through the year. The guy who famously had the movie Big Short just short of the economy and thinks there will be, a recession. And people have been talking about a recession, but we're only 3% off of the S&P highs. So unemployment's at 3%, which is the lowest it's been in a long time. I think 2.7 or 2.8%. Like, how like, what do you see on the ground versus like what you're reading? What's your view on like where you think like the macro economy is going to go? Would you short the market? Are you long the market? Are you indifferent? Like, hey, I'm going to have some cash and some in the market.
Yeah, no, I'm long the market overall. I'm never going to short the market. I'm long the US.
You're long US like Warren Buffett?
I'm long the US like Warren Buffett. I'm long technology. I'm long innovation. I just think, we have a great, we have so many things in our favor, whether it's geography, the centers of innovation, the human capital, the institutions, and a lot of good momentum. And I think AI is definitely provide another much needed jolt in the economy. So I'm excited about that. There are some data points I'm concerned about, like definitely, we saw a study, I couldn't find it before this, but that I believe auto loans and credit card delinquencies are very high. I'm assuming student loans would be too.
And the price of a car is like at an all-time high.
Prices of cars at an all-time high. Obviously, interest rates, they're now closer to, I guess, 30-year averages. But the pace at which they've increased has been shocking, right? Like any institution or individual who's holding fixed income, those things are devalued. I think it's a really tough environment to navigate, right? Like, but to your point, employment is in an okay spot. Mortgage delinquencies are at like all-time lows. So just don't really know what to do. I think we've been in a business loan recession where the companies have been cutting back, but the consumer seems to be pretty strong. So what does that mean? I mean, I'm personally, like, I overinvested in 2021. I'm happy with my position.
Like most of us.
Like most of us. So I'm building my cash balance for a personal reason. I think I plan to start putting more in indices. I've always been a fan of the S&P, but there's apparently one called VTI. It's a Vanguard index, like 3 basis points, so super low fee. And you get access, I think, all 4,000 companies in the U.S. I'll probably like dollar cost average into that. I don't know if it's time to be aggressive, right? I think Warren Buffett and the Big Short guy both sold a lot this year. August tends to be a slow month in general. I think, the market indices are down this month, but still up okay this year. So not really sure, man, but trying to just take it easy, take enough risk in VC that I'm trying to keep it really simple. How about you? What are you seeing? How are you managing your portfolio right now?
I mean, I think one of the only positives is unemployment, right? I think a lot of people are like, how do you have a recession when you have the lowest unemployment in, decades? I think if it wasn't for unemployment and like low mortgage delinquency is misleading, because I think it's 60% of people have fixed mortgage incomes versus like during the '08 crisis, it was like 30 or 20%. And I think it's like 60% of people have mortgages below like 3 or 4%, right? And so low interest rate environment, people aren't going to sell their homes, which is why home prices are rising, because supply is low, because why would you sell a house and then double your mortgage rate for a new house? But I think other than unemployment, I don't see like a lot of like positives, even from like a VC portfolio perspective. Like we're seeing everybody, enterprise at least, like everybody's cut costs, people are firing, they're doing smaller contracts. And so like it's going to be harder to grow for a lot of these companies. And though the S&P is doing well, if you removed the big seven, like barely up much, right? And so, I think a recession, like everybody, I think a recession is going to come. I'm glad that I didn't bank on a recession like early this year, like some did. I think you would have been screwed. I think this recession is more likely kind of like 1H 24, but I think it's just so hard. I think that's why I really take the Warren Buffett approach, like time in market, don't time the market, because people have been thinking it's going to be a recession for so many years. And it kind of happened last year, and technically it did, because we had 2 quarters down GDP wise, then it bounced back and people forgot about it. So it's really hard to time. I think you can't make your decisions around that. And as a fund manager, we can't do that. As a personal investor myself, like I also try not to do that and just dollar cost average over time, and then have cash for like moments like this when you want to deploy in the bear markets.
Have you been tracking corporate earnings at all? I haven't been, so I'm not able to like.
Whatever I see on like CNBC, I haven't like put in a document. I like listen to it. It seems like people have been hitting, but like still at the same time they'll hit, and then the stock drops because their projections are lower, right? So like it really doesn't, like the earnings matter less for the quarter. It's more about like what do you think the future is going to be? Because by the time you announce earnings, it's been 2 months past the quarter anyway.
Yeah, I think unclear how the credit and interest rates affect everything. Apparently, the slower China economy makes some people scared. There's obviously still the Russia-Ukraine thing. Like, just a lot of data points. But I think, it's a time to be constructive. I think outside of public markets, secondaries apparently are really hot right now. The same LP I was talking to is doubling down on secondaries. And so I think if you can, have a strong stomach, there's probably still opportunity in a market like this, but, also to make sure you're not losing your shirt if things do.
I mean, I was talking to an LP earlier, and the last 5 years, like what we've gone through has been like 2 decades of like investor experience in terms of we've dealt with a war, we've dealt with 2 of the 3 largest banks collapsing in the U.S. We've dealt with a pandemic, supply constraints, Apple iOS hurting consumer tech companies, climate change. I mean, different climate that we've never seen for the largest fire deaths in history and largest storms in history, and heat that we've never seen, the hottest month on planet Earth. Like, there's just like so many things where it's like, wow, like you never really get a break. And like, if you could survive these past 5 years, maybe you weren't thriving, but you did good enough, then like hopefully the next 5 won't be as hard as the last 5.
Try to survive and then just wait for the next bull market. That's what I'm hoping for personally.
I think to that point of like, right, all this change, how does it impact like us as a firm? How does it impact the industry? I think the most telling is, probably arguably the best VC investor of all time in the last couple of decades has been Sequoia, right? And Sequoia split their funds into 3 funds between US, India, and China. Sequoia just lost 5 partners. They downsized their firms, a crypto firm, to fund the funds, etc. And so, like, if the best investor in the space is like going through all this change, you would think that like that's going to trickle down to other people who haven't generated insane returns over the past 20 years. Like, what do you think the changes are going to be, particularly like in venture capital, given like what's happened the last 5 years and given rates are higher and given now like the IPO market has collapsed, etc.?
Yeah, it's a good question. So I mean, venture capital ultimately, some will say it's like an artisan business, like it's a pretty bespoke, hands-on thing, and tougher to scale, but it's to surround it. We're investing in cash negative companies, deep out of the money call options, trying to help companies find product market fit, scale, go against the incumbents. But there's going to be high loss ratios, right? And I think because of the liquidity that came through in some of the last few years, as well as like the quick follow-ons that happened, driven in part by the crossover funds, it just means things kind of got skewed. We kind of got away from focusing long-term on companies' earning potential, focusing on innovation, acquiring customers efficiently, good unit economics, being profitable at some point. And, I think a lot of VCs were just investing in hype cycles, which you kind of have to do, but also banking on another greater fool to be there to fund the company, even if they actually weren't creating anything that could support that valuation in the public market. So what I think it means in practice is a lot of folks are kind of having reckonings that to look hard in the mirror. I think the industry overall, I won't say it'll shrink, but I think it'll grow at a slower pace. I think there definitely is room for specialists, whether that's early stage firms or industry focused firms or geographic focused firms. But I think like being a supermarket catch-all, we do everything from high volume seed to Series E. I don't think it's going to be as easy to do. I think there's going to be a higher bar to get any deal done at any stage. It's going to take longer probably to get follow-ons. Valuations will be lower. But hopefully this means we're building more capital efficient companies. You don't necessarily need hundreds of millions of dollars to build an innovative company, right? You just need a really good team executing well, and the right capital to hit your milestones. So that's kind of what I'm thinking is going to happen. But I assume that some of the OG GPs will stick around. Some of the newer ones on a couple fund numbers will be fine. But I think if you're at a big firm and you're a partner without a clear plan to really rise the ranks, or at like a mid-sized fund, I think they'll be squeezed a lot.
And there was a lot of partners who probably wouldn't have been partners on the market.
Yeah. What do you think?
I think a lot of like emerging managers are not going to be able to raise their next funds. An emerging manager is fund 1 to 3. So I think if you're on that fund 1 to 3, it's going to be hard for a lot of people to raise. So I think you will see consolidation in terms of number.
That's existing.
It doesn't mean it's not for us, hopefully, not for work. But I do think it's going to happen for a lot of funds because I think part of it was like it had never been easier to get into venture the last decade, right? Like you could raise a 10, 20, $30 million first time fund. Like even for us raising a 40 million first time fund, like was like unheard of, right? Like the OGs first round, 645, like a lot of these firms, they raise like $5-8 million first time funds, right? Even if you account for inflation, like that just wasn't heard of. And so I think it's going to be a lot harder to start funds, and you're seeing that in the data. It's like the slowest first half of year since 2013, I think. And it's going to be harder for funds to raise additional capital because there were just so many funds that LPs were invested in. Now, I think there will be some consolidation. You're actually already seeing some firms actually merge, particularly smaller ones, and combine their firms. So to try to combine their LP base and their partner base. I think the larger funds will be fine. They already have enough LPs that they can like cycle out, and there's always going to be capital who are willing to go these large brand names. I had a call this morning with a large like multi-billion-dollar mega fund, and she was talking about like they were really bad at C, like they're a Series A, B fund, and their conversion from C to A is atrocious, and they should just like stop doing seed, stay A. And she thinks that a lot of like mega funds who got into seed, if they actually start to like do the reflection, look at the data and feedback, they'll realize like they also should get out, right? It's just not the best use of time doing a $4 million check when we got a $2-3 billion fund. Like it's really hard to keep focused. And so I think you're going to see a lot of those funds kind of grow out, similar to what happened for Tiger and others, but you're going to see that start to flow through. But I also think it's like, it's going to be harder to make money. And so I think it's going to be easier to see who's good and who's not. I think it was really hard to see who was good versus great in the last 5 to 7 years because everybody was getting marked up. That's not going to be the case anymore going forward.
Yeah, it's so real. Well, I'll say this. I mean, definitely harder market to raise. Every LP we talk to says that they're not allocating new managers, et cetera. But when you go to these events that are like for GPs, like it is
The energy's there.
packed. It is packed. Like they're getting sold out within hours. So that's interesting. I do think. I mean, the good news is that if you do raise your fund now, this shouldn't be a good vintage. I think prices are fine. There's a big, potentially tech innovation wave with AI. And I think the founders are approaching venture capital with a better mindset of like, we don't need a big team. Let's focus on being differentiated. I think a lot of founders that did D2C because they thought it was like cool or fun, like, are coming to terms with the reality that like it's very hard to scale a D2C business and be valued highly. And so I think a lot of folks are being more commercial with how to interact with venture capital and how to actually build a business that can generate venture type returns.
Yeah. Yeah. I think to the, kind of pivoting topics to like feedback, because the only way you can like reflect on this is if you like give yourself feedback, you do 360 feedback to some extent internally. We just had our mid-year review of our team. So we do mid-year feedback and end-of-year feedback every 6 months. And then even our interns, we do 5 week and 10 weeks for the interns. So essentially our firm does feedback 8 times a year, which is great. And I think it's unique. And I had a LP call this morning as well. They asked kind of like, hey, how do you guys think about feedback? How's it evolved over time? Is it the Bridgewater like daily? Is it the, Goldman Sachs once a year and like it's more anonymous? And so I think it's like really important, like in this time where like we're going through a change in the macro environment, you're seeing large firms like Sequoia make these decisions. If you're not getting feedback and you're not like taking time to reflect, you're probably not gonna like get these lessons and figure that out. It's like, how do you think about like that feedback loop, like especially because venture is such a long game, like how do we get feedback in the interim of knowing, hey, you have a unicorn? But also like more tactically other things that like you think we're doing good or not good as a firm, like giving feedback to the team and also like receiving feedback from the team.
Yeah, I'm happy to let you start. I know I've jumped in on the last couple of questions if you wanted to kick it off, and I can follow up with you.
Yeah, I mean, so I think from a feedback perspective, like we do, to give people perspective, everybody puts their stuff into a document that the whole team can see. And then basically we have like a circle and then everybody gets feedback to each other. And so there's no like anonymous. We can do anonymous, like on the side, people have feedback they want to give and have us share with the team. But generally, like, we don't want people to not know, what's going on. There should really be no surprises at the feedback session coming to you. Hopefully people give you feedback along the way. I think for us, like what's really helpful, the employee feedback is helpful for you to grow. But what I really appreciate more is like we do firm feedback. And it's like, okay, the firm, like, what's the firm good at? What's the firm improved on? And what's the firm, like, what should the firm stop? What are we bad at? Right. And so whether it's, we had our angel program, we did one time, we stopped. We just relaunched our founder launchpad, which is for operators, which is the second one. And we thought it was, really good. The intern program, we're on our 18 class. So obviously we think that's going well. And so if we don't have the opportunity to like really assess the firm and get the team's impact or input, and often the team is the one leading a lot of these things, then we don't know like, hey, what are the things that us as managing partners should be focused on? Because, the bigger the firm gets, the further you are away. And so I think it is really important that we try to like stay as close to the work as possible in these feedback sessions, particularly like on the firm, which can feel personal because like we kind of do represent the firm. It's just like really helpful. So I think we've created an environment where our employees are okay with that and know that we're not going to take it personal, which is important. Like we're not going to dock your bonus because you give us, bad feedback personally or for the firm. I think that's important to grow and scale over time.
Yeah, I think I like the way we do it. I mean, our ethos is rather be right than consistent. And so I like that we're always improving and we have that ethos. I'm trying to think here. I mean, I like our structure. And then I also like that we encourage people to give us feedback kind of instantaneously. And so if there is a rub that happens outside of the semi-annual feedback sessions, I think people are comfortable bringing it up. Like one of our team members didn't like how we approached the deal that they were advocating for and like pulled us to the side and told us. I was like, that's very helpful. Some firms don't do 360 reviews at all. Like it could be one-sided.
It's pretty rare.
MDs going into the junior people. I mean, our last firm, they did it like once every 3 years. Some firms don't do it at all. So I think we just get better and we're all, I think, a lot more in sync, and everything's because we do that. So I want us to keep pushing it. And I think what else we do that's helpful is our monthly jam sessions, and I guess our quarterly retreats, where we're actually just reflecting on what we could do better, encouraging the team. I keep getting impressed when we have these monthly jam sessions and people come with like slide decks prepared, and I'm like, here's what we should be doing differently. Now I'm trying to push a new investment framework checklist thing. So Gabby and I are working on it. So essentially, like, we had 2 scorecards. We had one on overall investment opportunity. We would score a couple dimensions, 1 to 5, like market, team, financials, HC value add. And then we had a rubric for founder characteristics. There were 7 characteristics, like, passion, vision, self-awareness. But I really wanted to make sure we're like, just, there's so many things to talk about when we go to partner meetings and when we're having voting. I want to make sure we're getting on paper. And so I proposed like a scorecard where we actually like check through a lot of things, like, okay, is a repeat founder? Is there actually customer validation? Does this align with our fund model? Just putting it all on one page. But we needed a glossary. We'd actually define what some of these terms were, because
Jarrid got immediate feedback from the team.
Immediate feedback. Actually, it wasn't immediate because I sent it around, but once you started using it, got some feedback. But working on that glossary, I should get it in your inbox tomorrow. Well, this will air later, but hopefully you'll see it by then. So I'm excited. I just like that we're focused on getting better all the time. I do want to shift gears, unless you have anything else on the feedback point.
No, go ahead.
So I know you had a really interesting experience recently where I think you passed on the founder and then they replied saying F you within a lengthy email. And I know, like, definitely took you aback and everything. Just wanted to hear, like, how you're thinking about it, how you responded, any teachable moments for us or for founders trying to raise VC capital.
Yeah, I mean, I guess, like, on the feedback note, right, and I shared this on LinkedIn and Twitter. I didn't disclose the person's name, but, like, as a founder, as a GP, it feels personal because it's your company, and the feedback would be like, you can't take it personal. It's a very small world. It's a very long game. You don't know who's going to come back. Like, LPs have passed on us, then they invest in the next fund. We pass on founders and we invest in the next company or the next round, right? And so it's a relationship game. And, like, if I, like, was, like, rude, then yeah, it would have been warranted. But it was a pretty standard pass email. And, I get it. Some founders are emotional. I've gotten long emails. It's the first, we looked at probably 12,000 deals over the last 5 years, invested in 50 companies. And it's the first email I've personally gotten where a founder said the F word. And so, like, it really, like, pissed me off to some extent.
Yeah.
I was going to reply. Like, I actually started drafting the email back, and I deleted it. I was like, I'm not going to reply. It's not worth it. And then it happened to me 4 p.m. on Sunday. I was like, I'm still, like, tweet something. It's a slow period. So, like, it's not going to catch up anyway. And then all of a sudden it became my second most viewed tweet.
That thing ripped.
which I didn't expect. So I was like, I literally said I'm going to do it because it's a slow period on Sunday.
Yeah.
And it just ripped, and I was like, I guess, like, it hit with some people. Some people got it, some people didn't. Some people were trying to say, like, hey, you never know what the founder is going through. And I personally don't care. Like, if I ever said that to an LP, I mean, we would, like, it'd just be so dumb.
Because,
like, and that LP, like, ever told other LPs that, like, we said F you. Like, I just, I think to some extent, and the All-In podcast talked about this, like, we're in a market where, like, people have just given so much grace to founders. And I think people don't appreciate, like, what it means to, like, raise capital. Like, once you go out and raise capital, like, your job is to be a steward of capital, as we would call it, right? It's not just about being a founder. Once we raise company as a VC, it's not just about investing in great companies. Like, that's, like, half the job. The other half is LP management, investor communication, making updates, making the people who gave us millions of dollars feel like we're listening to them, feel like we're, taking care of the capital. Like, people don't really care, like, if you just make the money. Like, some people do, but not real checks. Not like people who are going to give you hundreds of millions of dollars, right? Like, they want to feel good during the process. They don't want to just, like, make money 10 years later. And so I think to some extent, like, the last 10 years, and this is going to change, we've been in a place where people don't have board seats, no investor updates, and we kind of let founders get away with a lot of things. And now you're seeing that completely change. Liquidation prefs are going in 2-3x. People are requiring, boards. People are requiring more updates. And this was normal, right? Like, similar to interest rates, like 7-8% mortgage rates is normal. Like, this is, like, what normal was. And we're getting back to, like, what normal was. And so I think just understand that, like, there's no, and I had to learn this too, fund one, there are people who passed on us who we thought would invest because we've known them for years, and it felt personal. And I was like, if I can't get them, then who are we going to get? And so it took me time. So I get it as a first time founder. Like, it takes time to like grow with that and understand, like, nobody owes you anything. Like, nobody owes you money. Nobody owes you their time, right? Like, it can feel hard on the other side because we're getting emails and it's like, I want to reply to that person, but like the inbox is not my desires. It's somebody else's desires.
Mm-hmm.
So just like be mindful of that and think about it. It's a long game. The intention was not for the tweet to blow up. I'm glad I didn't name the person, but I think it's, hopefully they've seen it and they realize, like, hey, don't do that again, because I wasn't as nice as I was. Like, I'm not going to name the founder to other VCs, but I know plenty of other VCs that would literally blacklist you. And like, you just don't want people to control your future by having like a bad story to share about you. It's not worth it.
Yeah, and I agree. I mean, you got to always operate with respect. To your point, like we get it feeling like life and death and you're getting started out. Unfortunately, we're at a position now where we can take a more measured and long-term approach. We're never doing that, but I can understand, catching feelings or being upset. But I think it's one thing to be rude and disrespectful, but I think even more selfishly, like, some people have said how you do one thing is how you do everything. I think if you're sending emails like that, it probably just means your mindset is screwed up. Like, unlikely you're writing emails like that and are thoughtful about acquiring customers and able to attract great talent and have great investor communication. Like, those things are unlikely. Like, if you truly understand like the importance of respecting people, building rapport, being professional, I think that carries a lot of weight. And that's why I think some of the LPs get it. Like, why folks don't just care about the 10-year return, to your point. Like, folks know all these things are related, and there's some factors you can't control, but the ones you can control are how you interface with people, how you manage relationships. Do you take your client seriously? Does your team, are they valued? Are you encouraging them, right? And all that stuff kind of works together. So I think outside of just not offending people, but also like selfishly, you should not want to be that type of person, because that's not a path to success either.
No, I agree. We'll see. I blocked the founder on social, so I don't know if they will respond or not.
We'll see.
Well, this was a good episode with Jarrid. Appreciate you guys listening in, and we're back to work.
All right. Take care. Enjoy the summer.